Hello, fellow traders. Tis I, TheRumpledOne, coming to you on Tuesday, July the 2nd, the year's 2024. Let's talk trading. Trading the edge with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. And just a friendly reminder on the risk management, never lose more than you're willing to lose on any one single trade. Now, Walmal's been talking about trading the edge now for about a month or two, so we thought we might want to do a video or two and really get into it so you can understand exactly what we're talking about. So Walmal, let's see, I have to find your chart right here, and you said you want a 1 minute chart or 5 minute chart?
Go to the 5 minute chart first.
Okay.
And what I have an indicator that I got from somewhere way back when. I don't even remember where I got it from. But what it does is it draws onto your chart, onto your 5 minute chart, or any time frame that you desire to do it with. But I do it with 5 minutes. But it draws onto your chart basically the rectangles that I've been talking about. In other words, a zone as to where, a lot of people would call supply, and other people would call,
demand.
Word demand. Thank you. I couldn't think of it.
You having a senior moment on us?
I did. I just went flatline there for a second. but yeah, it draws in, rectangles, and what I liked about that indicator is that what it does is it goes and puts it in as a zone as opposed to a line. A lot of traders, they'll go out there and say they draw a line based on what they see, and they draw it across and they say that's my line in the sand. Well, that's great. The only problem with that is where I draw it and where TRO draws it and where anybody watching the video draws it may be different. It may be within a couple of pips of each other, and probably is, but it doesn't recognize the fact that we all kind of draw it in a slightly different way, and so things get sloppy real fast. Because if you're going to say I'm taking the trade, when it crosses over, the supply line or the demand line, when I make that decision, that's what I'm going to go and do. Well, how do you know? What if I'm going to go? I'm trying to go in a particular direction, and it crosses over that line, but the vast majority of other traders that are out there put that line, 5 or 6 pips away from where I drew it. Now I'm sitting there at a crossroads because the price is going to go and fluctuate in that area, and it moved. It potentially could have even moved 5 pips, and I had the opportunity to take my 5 pips, but because of where I drew it, I got in 5 pips late, and now I'm sitting there in drawdown. So that's why I kind of like the idea of drawing a rectangle. In other words, what I'll do is, before I had this indicator, what I would do is I'd go and look at the chart, look at the 5 minute chart, look at the 15 minute chart, and I would draw in where these folks would likely put their support lines, where they'd put their, demand lines or resistance lines, and I would go and draw that in as a rectangle. I just use the tool with an MT4 and do that and shade it in. That way I know that, hey, I've now gotten to this area where I know there's going to be there's going to be a fight there, and what's going to happen is it's going to get into that area, and price is probably going to go, we may say it's meandering, but it's not meandering. There's a little fight going on, bulls against bears, and so who's going to go and win that fight? What I've now done is I've said, okay, I'm calling that area an edge. In other words, what price likes to do, it likes to go from support to resistance, resistance to support, back and forth. And once it breaks a particular, area, it then moves to the next end and does that. We could call that, I used to call this all the time, if the price moves from one train station to the next train station. Well, the thing is, by doing this, you can go and actually see where those train stations are. And by drawing it on the chart, you get to go and see, where you think there's going to be a fight, where it's going to be an area where there's going to be some type of fight there, and price is going to have a difficulty, and it's either going if it does break through, it's going to probably break through with some momentum. If it doesn't break through, it's going to go and have some momentum in the other direction. The nice thing about it is that where the price is going to go and flip on you, or go and continue for you, and that's what I like about it, because it goes and produces a clear area as to where you have opportunity. I think I called that an opportunity zone yesterday. And now, just because it gets to one of these areas doesn't mean that I just go and take a trade. Because if it comes down to an area where let's say it comes down to an area where there's support, and it doesn't break through it, and it just goes up and down through this zone that I've drawn on my chart. Well, here's the thing. That doesn't mean you just immediately take a trade, because you don't know if it's going to go in reverse off of that area. You don't know if it's going to go and break through that area. So what do? Well, that's where all of our methods come into play. The whole idea of having a flip-flop box, that's what's great about it, because it's the type of thing. If I get a flip-flop box, and it happens inside one of those areas, well, guess what? Now that gives me an opportunity to go and say, hey, here's my method for entry. Here's where it's happening on the edge of this. In other words, I'm hitting support, I'm hitting resistance, and there's a better chance, or there's a higher chance, that I'm going to be able to pull out of the market with some type of pips. What's good about this, or doing it this way, is that normally, as everybody knows, I'm just trying to get 3-4 pips, on a trade, maybe 2 pips on a trade. Well, once I've made my core, I can sit there and take the chance and say, you know what? Let's say I get a flip-flop at a support area, okay? I go in, I take my trade, I'm going along now, and what I can do now is, as long as I don't break out of the other end of that support area where I've drawn my box, I can stay in the trade. And what that means is that I'm going to take either a very small swath, or potentially I could go and have a very, very large win. And if you look at the 5-minute chart, theoretically, I could have gotten in yesterday at, 1, 2, 3, 4, 5, 6, 7, actually 7 hours ago. So, very early this morning or late last night, depending on your time zone and where you live in the world. But I could have gotten in with a long trade all the way down at 26.11, okay? And I could still be in that trade right now at 26.80, okay? And so you're talking about right there a 70-pip move if you were to play this right. Well, I don't go and stay in trades that long, as everybody knows. I'm way too impatient. But at the same time, and I know Tiro can go and attest to this, a lot of times I'll sit there, I'll go into a trade like that, and I'll pick up 15 pips, or 20 pips, which is a tremendous amount of additional pips. And again, that's a very good risk type scenario to take, because I'm talking, if you talk about those guys that like to have their ratios, you're talking 5 to 1, 3 pips to 15 pips, that's a pretty good risk reward, those guys would say. I don't look at things that way, but what I look at is sort of like, okay, I'm in the trade, the trade is going in my direction, and what gets me out of that trade is either one or two things. One, my trading day is ended, and I'm not going to stick around because my trading day is ended. Or B, what happens is I get a signal that's going to go and send me in the other direction. Those are usually 2 reasons it takes me out of the trade. But that's not, that it's a good, trade to go and take. High probability, and again, you got very low risk. But if I'm up, I've made my core, I'm willing to lose 3 pips.
Yeah,
4 pips.
I don't know if you noticed, but on this 5-minute chart, we had a flip-flop box, and that would have been worth about 10 pips had you taken
yeah.
that trade. And the last,
Yep.
yeah, when we first started talking.
Yep. Yeah, that's the nice thing about these trades is that, and the thing is, probably, at the very beginning of that trade, you could have gotten in all the way down at 73.1, okay? And the nice thing about it is, then you could have put a second one in at 78.8, and you could have just put another one in at 81 or 82.
Are you looking at the 1 minute chart?
I'm looking at the 1 minute chart. I flipped over to it.
Oh, okay.
Yeah, I mean, because I take my entries off of the 1 minute chart. I use the 5 minute chart to go and the 5 minute or the 15 minute to go and draw my support and resistance lines or boxes because I don't use lines, and then I'll go and trade and look for entries off the 1 minute chart.
Okay, now you said support resistance, then you said supply demand, and people, some people think they're different.
Well, I use those terms interchangeably, and I can understand their understanding of being different because the reason why I use them. Let me go. I don't want to put words in people's mouth. I'm going to say why I treat them the same. Okay, and the thing is, what happens is when you get into some type of consolidation, accumulation, so to speak, what happens is what's happening is there's a lack of supply, and and so what happens is, or there's a lack of supply or there's a lack of demand in that area. So what happens is you either go and, increase demand for buying in that area, or you increase the desire to go and sell off. And so you wind up getting a little bit of trading back and forth, people just, moving things from one hand to another hand, essentially. And so it creates an area that, could either be, support, that's how your support is getting built up. Whereas your resistance is getting built up on the other end, where what happens is it's, generally speaking, moved a bunch, and now it's hitting an area where people are saying, either one or two things. Either one, okay, I've made a ton of money here. I'm taking my money off the table before it goes away and evaporates. So that all of a sudden there's not nearly as much demand to go and build. Okay, and at the same time, there are other people who are just going to go and say, price is just too stinking high. I'm not buying into this market. It's sort of like like by us right now, fuel by us or petrol by us. It, generally speaking, goes for $2.95 a gallon. Okay, and I'm not going to go and buy it from the guy across the street and selling it for $3.35. Why would I do that? And that price is way too high. I'm going to go across the street. Well, if all of a sudden the guy across the street goes and raises it up to $3.35, well, guess what happens? Now you're sitting in it. You got to make a decision. Is the price of fuel too high, or is that just the new normal price? And so what happens is you get a lot of that same sideways movement that we're talking about on the lower end. You have it up there, and it's just, again, it's a fight as to whether or not there's enough demand to go and cause it to continue rising, or there's too much supply sitting out there, and which is going to cause it to fall. And so for that reason, because I know I'm oversimplifying what's actually happening, but the way my brain works is I don't need to know all of the intricacies of what happens in the market. All I need to know is that the market moves from station A to station B, and it happens at these areas where I'll call supply and demand areas, and or support and resistance areas, and all I need to know is that I'm going to move from one of these to another one, and I'm going to wait for my method to go and dictate whether or not I'm going to go and go whichever way I'm going to go with it.
Right. And you know what? We're just about out of time, so I've got your trading template up here, so I just made it so the traders can see what the indicators are, and some of these may be turned off. But you know what? We are out of time, so it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.